Hey, Mark, you're on mute.
Hey, good morning, everybody. A little
There you
delay
are.
here. Sorry, I didn't have the host tab for some reason. So I had to have Tom came in here and bailed me out as usual. All
All
right.
right, just making
I
sure.
need to turn the volume up here. Okay, well, it looks like the Matador has put a hurting on the bull today. A little bit. We're down 64 here pre-market with a little hotter CPI than expected. Didn't go down as much as they expected from what I saw. And so, we knew it had to come, had to be at least some kind of a pause. But with this market, you don't know, right? We could be back up by the end of the day. Looks bleak at the moment here, at least for the day. But it's really, I think, going to be healthy if the market could even go down here, go down a little more, and if it wants to go back up, go back up. I think it would make a little more sense than just up, up, up. That stuff doesn't cut it in the long term. But we can see the VIX. Look at that, only up 0.64. Very, very little effect to what's going on here. And this is probably the biggest news of the week that we're seeing here. I mean, Thursday's got a lot of news, maybe something there. But I think this will probably be the biggest news event that we know about going on. Wow, it's getting weaker. Um, okay, so I was just looking at this. I don't know how many of you were in that trade. I actually started this over on YouTube as we led into coming in here, and I mentioned it yesterday, I thought. But if you were still in this trade, you're going to be looking good today. This was a trade that I started last week, uh, and then at 49.30, then I think it was Thursday, I added the 50.20. And anyway, today we'll be down in here, and I think you'll be in pretty good shape, especially if it stays there by the end of the day. You'll be, I'm sure, out of the position. But anyway, I just thought I'd bring that up. I thought it was kind of interesting. Where is my chat? Okay, here's my chat. All right. So if anyone has anything to ask along the way, you certainly can there. Hey, there's a tab there. Whenever you type in a message, it says everyone, or you can pick individuals or hosts or whatever. Just have it on everyone, and then everyone can see your question, which makes things a little easier for everybody. Even though I do try to repeat them, sometimes that can be a little bit of a problem. So anyway, I thought that was interesting, that one. Um, so that brings us into today. Well, what do we do here? Now the market's made this big move, not a tremendous uh, vol spike, but we're down pretty good. Maybe we'll get there. Now, it could be that on a day like today, as far as adding new trades, you may want to stand aside. Hopefully, you have some trades on, calendars, whatever, and you're already hopefully basking in the glory of some of them, right? Because they were probably getting a little strained on one side. So let's just look around though. So a thing I think might be worth looking at sometime today. Oh, and in case you guys, folks here that didn't know it, I like to put on my trades in the last couple hours of the market normally, because it just gives the market less time to move against you on day one. And as I was saying yesterday, whenever you're an income style trader, like we're doing these non-directional theta positive trades, you end up, first off, that's when you're most vulnerable, right? Because the market hasn't given, you haven't gotten any theta at all. And so you don't want a huge move right off the bat. But sometimes, particularly in a market like this, maybe later today, we'll see where we're trading. I'd have to, all I have to work with is yesterday's close. But the idea would be, well, we'll see how the day plays out. But it may be good later on today to do something like an all put flat fly where you center it about 10 points below where we're trading, and then you buy, then you buy the long, probably buy the long 60 to 65 points. We were looking at 65 yesterday and then down 70. And we looked at 65. I liked that one better yesterday, as I reminded you guys, because of the fact that if it does go down, you were actually going to be positive. And maybe even so positive that you could just take the trade off. I don't know. We'll have to see how that plays out. I have had that happen in an all put before. I was in an all put one time. I put it on. I used to know the years. It was like, I can't, 2015, 2016. And put it on a Tuesday. And on that Friday, we did a 4 standard deviation down move, and I got out at 7%. And what was more impressive is I had a couple newer students who got out at 9 and 10%. So if you put them on with that structure, it can work for you. And I know you're saying, but what about volatility? Well, volatility is not as important in a fly. It's more about the movement. And the reason is all these options are in the same expiration. So it's the disparity in expirations that gets you in trouble if volatility goes against you in a calendar and a diagonal, because if that short does better than the long, that's the problem. So just keep that in mind with your trading. But I think a trade like this might look good here later on today. Now, that brings to mind another issue. I wonder if I could get any kind of graph that looked like, hold on, this might work. No, that doesn't work. Doggone it. What if you had, let's see, if you put on a calendar, let's say, man, these graphs are absolutely gigantic to them. Here, let me try to get this a little smaller. There, that's a little better. So even if you put this thing on up here and you centered it, look at it, that's 50-40. So you're really, you'll be down probably in this area. Now, first off, hopefully you're just up money, right? Maybe even, a decent enough profit to take it off with the vol rise, but maybe you're not. This trade, by the way, that was for next week. That's right. Never mind. But be the same if you were in it for this week as far as what you would want to do about it. But we talked about a trade, putting on trades yesterday. Those calendars were all in the 23rd expiration, and then you bought the the 27th. That is correct. All right. So, like I said, one of the tough things that can happen to you. Let's suppose you put on a 50-40 yesterday. That might have been a little higher than I would have put one on, because I think that you would be. Ooh, that doesn't work at all. I think that you should have probably put it on a little below where we're trading anyway, as I showed you. But if you had a trade on like this and you're down in here, I would let this bake a little bit. If you're just, if we open, let's see, where are we going to open? Oh my goodness, 41. Now we're going to be down about currently, I guess, 49.50. So you're down in here. Now, if I had a trade with a structure like this, like I said yesterday with a calendar, usually 5 to 10 points before the lower break even, I want to do something. Now, the lower break even on this is, wow, all the way down in the 48s. And I know this is a mocked up trade, folks. I'm just trying to get something to use as an example. But if I had something that, say, was 48.90, you don't necessarily have to adjust it before 4,900. But if you found you were down in here and you were down money and the market was still continuing to look weak, then I would adjust it. Now, the way I approach adjustments is, I've told you when I do it, as far as on the price graph. But another thing is, I try to avoid adjusting, just like I try to avoid starting a new calendar or fly diagonal in the morning. I'd rather do it in the last couple hours of the market. I'd also rather adjust them if I can. So if we opened up down here, and let's say we are 10 points away from your lower break even graph, something like this, what I would do certainly in the first 15 to 20 minutes, I'm never doing anything. We could open up here and I wouldn't do anything in the first 15 to 20 minutes, because often the market tacks back the other way from whatever it's doing. And it's worth a shot. And doing a panic adjustment down here is only going to cost you money, because you're going to pay dearly for anything you do. And not only that's if you get filled, you can sometimes have difficulties even getting filled in something like this, probably more likely in a fly. I've seen some down markets where you had on a fly like this and you were open up outside of it. Sometimes it can be very difficult to even get a fill. So if you had on this calendar, which I think, I'll talk about those more today, because that's probably what most of you had on more than flies. But So if you're down here and you go, hey, Mark, I'm at my adjustment point, the market is open. Okay, 15 to 20 minutes. Let's see what happens. Sit on your hands. Don't grab that mouse yet. Now, now it's later. Now it's an hour into the market. We're still here. What do I do, Mark? Well, I would wait. In fact, I would wait in a market where it's made this a bigger move like this, especially. And if it got to my lower break even, then and I was an hour into the market, then I'd probably go ahead and adjust it. But if it was just a little above my break even, I would wait as long as I could watch it. Now, if you're going to be gone, can't watch it in a meeting, doctor's office, whatever you're doing, well, then you need to adjust it before you leave. So an hour into the market, if we're here and you have to leave for the day, then go ahead and adjust it now. But otherwise, try to watch it down here. Don't let it get away from you. Way outside here, you have to adjust sooner anyway. But you never know, and we've seen it happen. You don't want to be in a position where you're down here. You weren't really, it wasn't going any further. It did the damage it was probably going to do, and then it reverses. You go, oh man, I added this down here. I wish I hadn't. And so be patient if you can, by all means. So if you can't watch it, and we're down in here today, I've gone. Okay, I'd be absolutely adjusting it. So now let's talk about different adjustment ideas down here. First off, if the VIX was higher, let's say we did all this and we spiked and maybe the VIX is 18. Ooh, now we're getting somewhere. Maybe the VIX is 18, 19. What I would do down here is add a fly. You said, why would you do that? Well, if the VIX spikes and we're already, in mid-teen, upper teens, I wouldn't want to add more long Vega to this. I'd want to add a short Vega trade, because if you add, say, a calendar down here in a higher volatility environment and it rebounds, you will have bought this in a higher volatility environment. It rebounded, and that could hurt your trade. This trade they adjusted with on its way back up. So let's just look at an adjustment here, just for funsies. And maybe that'll make a little more sense to you looking at it. And if I was going to be at 4,900 adjusting, I'd probably be at like 4,870 with a calendar adjustment if that's what I chose to do. But now this graph, of course, looks crazy because, as I told you guys, about 10, 15, 20 minutes before the market opens, the graphs go crazy. This will rectify itself after the market opens, but we can still use it as an example, can't we? So I would add a calendar down here if the VIX was, say, where it is now. I very well might adjust with a calendar down here because the volatility is already low. But if volatility was higher up in the teens, I definitely use a fly. And you could use a fly here if you like. And let me show you how you could do that. So to adjust with a butterfly, whether I'm adjusting a butterfly with it or a calendar with it, we still have the same principle the way I do things. I'm going to go down 30 from wherever I adjust, sometimes 40, and I'm going to center the fly there in the same expiration as the trade that I'm adjusting. So I'm adjusting a 23rd February calendar. So I would be adjusting with a 23rd February short. Now, and then you can decide, go out 4 days, 5 days. Sometimes if you had to do this in a fly that's further out in time, sorry, I meant to fly. If you have to ever adjust with the calendar, or you wanted to, and you're further out in time, you might have to even go 7 days wide, but I would try to use 4 if I could. But in the fly, so I'm going to go down here to 49.70. Remember, I'm adjusting a trade that's at 4,900, right? If it looked like this there, 49.70, 30 points down. And then I want this trade to be asymmetrical. So it could be 60 up, for instance. That'd be 48.70, by the way, Mark. What are you doing? 48.70. Getting ahead of myself. I'm so excited about a down move. I think my brain's not fully functioning. So I'd go down 30 from 4,900, 48.70 is the center. and then go up 60, that would be 4930, down 70, and that would be 4800, right? And that's what I would do. I'm going to adjust. Yeah, it won't even show up right, but I would adjust when I adjust with the fly, whether I'm adjusting a fly or a counter, I do it with an asymmetrical fly. And the reason that I do that is because if you use a symmetrical fly, say 70 up, 70 down, and shame we can't really get the example here, but you have these short deltas, which is fine if it keeps going down. But if it goes up, you're going to get burned pretty quickly. So by doing it with an asymmetrical fly, you're kind of being a little more middle of the road with what you're doing, and not taking as big a commitment on on direction. You just want to give yourself more room. Okay. So that is how I would look at adjusting today on the downside. Is anybody going to have to do that? Is anybody in a position now where you're going to have to adjust on the downside? I just put it in here. I'm just wondering if a lot of people, I figure most people today, oh, you will, Mike Welch will, all right. And is that a fly, Mike? I think a lot of people probably are in we're in better shape going to the downside, but this might be a little bit too profound of a move, huh? On the downside. So, like I said, if you're going to adjust, let's wait 15 to 20 minutes to do anything, no matter where it is. And then if you're, if you're at your adjustment point, if you're beyond your adjustment point, maybe you were going to adjust at a break even the downside and you're 10 points beyond it, go ahead and try to adjust there. Now, that brings to mind another point. If you're adjusting and you're already outside the break even, Jesus calendar. Let's say you're adjusting and you're already 5, 10 points outside of it. Maybe we open up outside your break even and we stay there. Now you're, 20, 30 minutes in. You tried to be patient, but you couldn't. Sometimes, you can't always go down 30 and have the graph work, because what can happen is sometimes you could go down, let's say you're adjusting this calendar with a fly, and I decide to, let's say I did that. I wish this is never going to show up right. But if you went down 30, a lot of times it doesn't give you enough relief, or 30 doesn't quite cut it. So if you're at 49.90 or 48.90 and you go down 30, it could be the case that your trades don't even connect together. So you'd have a fly up here, and then you're trying to adjust it with another fly, and they don't even connect in the center, and you got this big dead spot. We don't want that. So if you're getting a dead spot by going down 30, meaning that your two graphs aren't connecting above zero, then what I would do is maybe try going down 20 or 25. Okay. Try going down 20 or 25. Thank you, Lawrence. And then that could possibly work too. Jason, yeah, I've done a lot of iron flies. Yes, I'm going to talk to you. I'll talk to you about that here in a moment, about the one-on-one, Lawrence. If you've done, I have done a lot of iron flies. I don't use them anymore, to be honest, because of what I've decided is my main methodology of adjusting is, if I am in a single graph, I add a second one too, and if I'm in a double, then I take one away. Well, if you're using an iron fly, you just get so many strikes. So you start out with, put vertical, call vertical, and then that's 4 strikes. And then if I adjust again, that's another fly or something, that'd be another 4 strikes. I got 8 strikes. And what's even more confusing, they're calls and puts. So then you have all this stuff in your account and you're looking at it. And what I've found for myself, when I used to do it, and for students, is that often you end up making what the fat finger mistake. You take off something that you meant to leave on because it was in this other fly, but sometimes in the heat of the moment, You can close one of your longs or that you wanted, or close one of your shorts that you wanted. So that's why I don't do iron flies, because it would be too complicated with the adjustment method that I use. I'm not discounting iron flies. Now I will say this. I don't, and this is controversial for some folks. I don't believe that putting on a fly, just putting on a fly, I don't believe you're any better off if I put on a fly, whether it's iron or all calls or all puts. You're going to pay the same, because yes, you get a credit with the iron fly, but they do take the margin out of your account. So you're going to pay the same. Now, sometimes people, I think particularly newer traders, they get excited when they see a credit. They go, oh, well, why don't I put this fly on at a credit? Isn't that better? No, it's not better. It's just different, right? You're still going to have the same amount of money taken out of your account. And I could demonstrate that to you if we didn't have such a crazy pre-market graph. I'm going to post my email, Lawrence. Yeah, believe me, by the time we're done here, you're going to know all kinds of stuff. But anyway, so that's why I don't use iron flies, and why, I don't think that they provide any particular benefit. I mean, if you have a different adjustment methodology, maybe they do. But for the one I do, it doesn't provide any benefit. And in and of itself, if margin has benefits, yeah. If has margins, yeah. Well, the idea is that they're going to hold, if I buy a call fly, generally speaking, they're going to charge me the same amount you're going to end up taking out of your account with your margin less your credit, is what I'm saying. Yeah. So that's why I don't use them. Here, Lawrence, I'm going to go ahead and I'll put the email address that you can contact me at while we're at it, and then I will go on with class. So contact me there and we'll talk about one-on-one mentoring. Lawrence said, whoever else wants it, or if you have questions along the way, go ahead and email me there. If I can help you, I'd be happy to. All right. So that's a little bit about adjustments. And I have a lot more I could do here, but it'd be much easier for one if we had a better graph. Let's see. Let me go back up and see if I missed any comments. Okay. Mike had 3 possible adjustments: loaded, resting, and I'll see which one looks best. And you know what? That's a great point. Mike has been around with me for a while, and he's a very solid trader. And that's what you do to prevent mistakes. Now, the market isn't open yet, so Mike's already preloaded whatever he thinks he might do as an adjustment. And then you got it all loaded there, and then you can look at those each individually, think about it. Once again, give the market 15, 20 minutes before you do anything. And then you can decide which one you want, but you've already had them loaded, gives you a chance to look around. Hey, you might even need to tweak it or something. Hey, maybe you put your adjustments you thought you were going to do and we're down 66, and maybe here in 5 minutes we're down 80. You might have to change that around, or maybe we're only down 50. So keep yourself organized and try to take, the fear and other emotion out of what you're doing, because that's the quickest way to make mistakes. Now, I don't know that it will happen today, but another thing that can happen in a faster down market is sometimes you could be in a fly, and I've seen this many times, and you open up outside the lower break even of your fly, and you go, okay, I want to sell the fly I'm in. I don't want to repair it. It's too far gone. And they'll tell you, hey, we don't want to sell it. We want you to actually give us money to close your trade. Let's say you paid the trade for the trade, you paid $5 debit, and they'll tell you, hey, to close it, you need to give us $2. Don't do that. Don't give them money to get out of that trade. All you did, if you do that, is you lost more money than you could have lost if you went to expiration. So let them wait. I've had that happen, had it go on all day. I'm not giving you money to get out of my debit trade. right? I'm not giving you a debit to add to my debit. So don't do that. I don't know that that'll happen today. That happens when the volatility is a lot higher usually, but it could on a crazy day like this. I guess it's Andre, I think, says, what is your time window to make adjustments on the 16th February calendar, Tuesday, the last day? Okay, well, if you're in a calendar that expires this Friday, I'd really like to be out of it today. This is the last day that I would add a complex. So if you're in a calendar today and you're at, say, lower break even single calendar, you could add a calendar today that's even for something that expires here on the 16th, but this would be it. If it were tomorrow, I only take complexes off. So tomorrow, if you're in a double, could you adjust by taking off one? Yes. But could I, if I was in a single tomorrow, would I add one? No. Okay. And the more you guys are around, particularly those of you that stay next week with us here, you'll be seeing a lot more about my adjustments. There's a lot to go on. This gives you another perspective, somebody else's perspective on what they've done for adjustments. I'm not telling you I have the greatest adjustment system of all time, but I think it's good to have something that I know works that I can share with you, and you can compare it to what you may be doing, or maybe you're already doing it, whatever that may be. So today, I'll just want to recap. By the way, if you guys have any other questions or things you want me to go over today, I'm happy to go ahead and put it in the chat, because I'm kind of at the end of things, talking about adjustments that were really probably be relevant today, because that's probably what we'll have. Either you're adjusting, maybe taking off at a profit, hopefully not in a hopeless trade that you had to take off at a loss, and we're staying put, so to speak, pardon the pun. I wouldn't add new non-directional trades if in the afternoon, the last couple, 3 hours, we're still down 60, 70, 80 points. Just give it to tomorrow, right? Now, if you have to adjust something today, that's okay. But a brand new fly or calendar today, if we stay down, over 50, 60 points, I'd probably wait till tomorrow. I just think it's more prudent. Let's try to be, conservative. Another day is not going to matter. Keep your powder dry. Thank you, Jason. All right, Mark, what about stop loss? Okay. Well, first off, if you're talking about a stop loss that is put in by order, let's say you have a calendar and you go, hey, if it gets to, or this flop, hey, if it gets to 49.50, then sell this counter. I don't want to be in it. But you can't have an order in like that, really. I mean, you can try to say, hey, I'll take within a few cents of the mid. But if you just put the plain old stop loss order in, they'll fill you at the ass, you'll get a terrible fill. So in my opinion, when you're going to get out of a trade that's at a loss, I'd want to do it live, because there's really no effective way in my mind to put in an order to close a trade if you get to a certain point, because I'm really afraid of how bad your fills are going to be. So I always teach people that in option spread trading, there's only one order style, and that's limit. Not stop limit, not stop loss, nothing. It's limit. So that's the only order you should ever be using in option spread trading, because we're trying to deal with around the mid price. And if you use a limit order, you're going to get the full bid or ask, which is awful. All right. Now, what about a mental stop loss? And I talked about this yesterday too. What I do with that is, hey, if you're down here and you can't adjust it, like I can't add another fly and have them connect above zero, or at least right at zero, well, then I'm going to close the trade, whatever I'm down, because I can't repair it and we're all the way out here. But I've had many instances where you're in the center of a graph, particularly with calendars, or around the center, and you might be down 10 or 15%, but that trade is all right. It's in the center. I don't exit trades on a percentage down, is what I'm trying to tell you. If I'm in a flyer calendar, I'm not going to get out of it in a decent part of the graph just because I'm down 10%, because I still have plenty of life left in that trade. And if you're inside this graph, it's telling you as time goes on, particularly if vol would start to help you, but theta is always going to help you, it could be just fine here. But if you're out here and you just say, Mark, I wanted to adjust, but I can't get anything to look right. Maybe you're out here and whenever you go down further, like I said, they won't connect. Well, then I think you have to close it, whether you're down 5% or 15%. Okay. All right. And one other thing, resist the temptation today to say, this is it. This is the time. This is the time, folks. I'm going to put verticals in the SPX. Don't do that on a day like this. You're going to pay up for those. Not as a speculatory idea. On the flat fly, how do you choose puts or calls? Bill, you can start it with either puts or calls. And the way I normally choose it is if I have on a put fly and I'm adjusting it, then I'm probably going to use a call fly or call counter. That's just because it's easier on my old eyes when I look at my account and I go, okay, here's a fly, it's puts, that's my main one, original. Here's my fly, that's calls, that's my adjustment, or vice versa. So that's what I do. In flies, I don't think there's a particular benefit to whether your puts or calls. I know I named that trade. I have the all put flat fly. It's just what I was using, but you could certainly use calls. Doesn't matter. Okay. Good question, though. We get some really good questions in here. This is my day 2, and I'm very impressed. People are on the right track. They're asking the right things, and that's great. All right. Anything else before we go here? And then I'll be back with you tomorrow at 8. We do have another Traders Lunch. That'll be on Thursday at 1 o'clock Central. I believe there's a big trading group meeting today here on Aramar, though. Maybe you take advantage of that. I can't remember. Is it noon or 1 or something like that? It's around there. Check the schedule, and maybe you could come to that. But I'll be going to that today, the trading group 1 meeting myself, just to say hi to everybody and talk the market and see what's going on. Bill, there is a link. I could give you a link, but email me at that email I put in here earlier, and I can provide you the link. It is on the site, but if you're having trouble finding that, then let me know and email me at this address, and I will send you a link if you're having trouble finding the information for signing up for this every day, Monday through Friday. I'm going to do a opening bell, and then you'll get 2 traders lounges a week, one on Monday, one on Thursday in the afternoon with me. And that sign up, I'll send you a link if you want to email me there. If you want one-on-one mentoring, also email me there. And by the way, I talked with Tom yesterday, and I'm going to start next week. I'm going to have, I think we call it Mark's Income Trades. Not sure on that. I think that's what we called my texting trade service. And you can sign up for that trade signal service, and I will tell you, hey, I'm getting in this calendar fly here, and send it out so you can follow along with me. And if I adjust it, I'll tell you when and how. That'll go out in the text, so you'll get real time what I'm doing in a trade. And I'm going to put out 2 trades a week, maybe once in a while even 3. But I'll do 2 trades a week that you can follow along with me on. There'll be a link for that here soon. I'll share it with you when I get it. When Tom gets it built, you'll be able to sign up for that. That'll be separate, of course, from the opening bell Traders Lounge. And then you can follow along with me. All right. I really appreciate your attention here today, folks. And stay calm. Think about your adjustments. Double check everything. Let's not fat finger something. I know I've done it. I've done some big ones, where you're in a hurry and you get in a panic. You don't want to be there. All right. So have a good one. And stay safe there with your trading. Bye-bye.